Welcome to the online financial school. As usual, we try to develop financial skills in a cost-effective way, and our delivery platform enables you to acquire skills fairly easily. This lecture is about life insurance. It asks, what is life insurance? Why does life insurance exist? Who needs life insurance? This is a basic introduction. Life insurance exists to meet two basic human needs. So the first need is protection, and the second is savings. In real life, most policies are both protection and savings, but the real skill, if you are going to be able to define the value that you are getting as a client, is to be able to separate the protection aspect from the saving aspect, to be able to tell what is covered, to tell the sum assured, and to tell what part of the premium goes to saving, what goes to protection. We'll start with protection, and the most obvious form of protection is protection from death. Now, no policy can protect anyone from dying. Everybody dies in the end. What we are talking about is dying early and leaving young children who need care. Sickness and hospitalization. The risk there is that there are costs of specialists, costs of doctors and specialists, costs of medication, cost of hospital stay. All those costs can be covered through an insurance policy. Income protection. This is the kind of policy which covers you when you can't earn an income, for instance, because of sickness, because of disability, or any event that the policy specifies. So in this case, you protect your ability to earn by taking an insurance policy. Dread disease, sometimes called critical illness, covers you in the event that you are struck by any one of a number of diseases. There are a number of diseases that could be covered under this policy, but I'm going to go with two of them. The first one is cancer. If you are struck with cancer, hospitalized, you can't earn, then your dread disease policy can come into play. Similarly, if you have a heart attack, you can bring in your dread disease policy. Disability. Now, in assessing disability, there are two types of ways of looking at this. The first way is to use what is called the continental scale, which assesses your ability to function normally. So can you use your hands, your feet, your eyes, your ears? Or you can be assessed on the basis of your ability to do a job. Accident. Getting involved in an accident. It can be a car accident. It can be an accident at work. For example, if you work in a mine. An accident policy can be obtained to cover the contingencies that you could get involved in an accident. One of the most subtle types of protection that you don't really see often is the risk that you could live too long. So if you live too long, the tragedy is that you don't have money and therefore you can't look after yourself. There are policies that sell where you can buy an income which is paid to you until you die. So that's protection. We now move on to the savings aspect of insurance. So in this part, we are looking at why people would save, the objectives, saving objectives, why people would save their money. So the first part would look at retirement. That's probably the most obvious. All of us will get old eventually. We work hard. One hopes that we have saved money, and in our old age we draw on that money to take care of ourselves. So saving for retirement is one of the most important saving objectives. A wedding may be not the most important reason for saving for some, but there are others who want to have the wedding of the century, who want to enter holy matrimony in style. So in that sense, you can save money and meet your need. Holiday of a lifetime, see the world at 50, golden jubilees, see the world at 60, diamond jubilees. In this case, you are saving money to go on a holiday of a lifetime. Another saving objective could be to save in order to buy a house. So you save money in a disciplined way for a very, very long time, and after the time is finished, you take the lump sum thereof and you buy a house. Education. Young kids need to go to school. Young kids may have to go to private school. University education can be very expensive, so you save money in order to provide for education.